Welcome, everyone. Today, we're doing a deep dive.
Mhm.
We're getting into some pretty important financial details,
That's right. We're looking at Micron Technology.
specifically excerpts from their Q2 2025 10Q filing.
Yeah, the quarterly report.
Think of this as your shortcut, you know, to understand what's really going on with them.
A big player in memory and storage, definitely.
Our mission today, pull out the key insights, performance, challenges, maybe a glimpse of the future.
All based strictly on what's in this report.
Exactly. We'll touch on things like revenue shifts between their different divisions,
Yeah, that was interesting.
details on their debt, their financial health overall,
And some legal stuff too, right? IP issues.
yeah, ongoing intellectual property things. We've waded through the filing.
Well, you don't have to. It's dense stuff, but revealing.
It really is. The level of detail is quite something.
Gives you a real look inside.
Okay, let's unpack it. Starting with the big picture. Overall financial performance. Q2 2025.
Right. So for Q2 2025, Micron reported revenue of $8,053 million.
$8.053 billion. How does that compare?
Well, compare that to Q2 2024 when it was $5,824 million.
Wow, okay. That's a significant jump.
It is. And the bottom line looks better too. Net income was $1,583 million, up from $793 million in the same quarter last year.
So, yeah, a strong rebound is the headline there.
Definitely.
And that wasn't just a one-quarter blip, was it? The 6-month view?
No, the trend holds. For the first 6 months of their fiscal year, ending late February 2025, revenue hit $16,762 million.
Okay.
That's way up from $10,550 million in the same period the year before.
And net income for those 6 months?
That's where the turnaround is really dramatic. A profit of $3,453 million.
Compared to?
Compared to a loss of $441 million the previous year.
Right, a loss. So a massive swing back into profitability.
Huge swing.
Now, the report mentions other comprehensive income, loss, net of tax.
Yeah.
Quickly, what's that about?
Yeah, think of net income as the main score. Other comprehensive income, or OCI, catches certain value changes that haven't hit that main score yet.
Like what?
Things like shifts in the value of certain investments, maybe currency adjustments, stuff like that.
Okay.
In Q2 25, it was a positive $30 million. Q2 24, it was a small loss, $4 million.
So it adds to the overall picture.
Exactly. You add it to net income to get total comprehensive income.
Yeah.
It just gives you a slightly broader view and, the positive trend still holds.
Got it. More complete picture. Okay, let's drill down. Business units. This is where it gets mixed, right?
Yeah, definitely a mixed bag here. Let's start with CNBU, Compute, and Networking.
Okay.
Their revenue actually went up 4% compared to the previous quarter, Q1 2025.
Okay. Modest growth, but growth nonetheless. What drove that?
The report points directly to HBM high bandwidth memory.
The AI stuff.
Exactly. Sales of HBM products jumped over 50%.
50%. Okay, that's significant.
Yeah, it really highlights how much demand there is from AI and high-performance computing.
Makes total sense. What about the storage business unit? SBU. Sounds like a different story there.
It is. SBU revenue dropped by 20%.
Ouch. Why?
Two main things mentioned. First, data center customers apparently pulled back on storage spending.
After a big growth spurt, maybe?
Yeah, that's the implication.
Yeah.
And second, just overall price declines in the NAND flash market.
Okay, so market cooling off and weaker pricing.
Seems like it, for that segment anyway.
And then mobile MBU.
Even steeper decline there, down 30%.
30%. Wow.
Yeah. The filing says lower bit shipments, basically. Mobile customers were cutting their inventories.
Yeah.
And average selling prices for mobile memory, both DRAM and NAND, were also falling.
So headwinds in the mobile market for Micron this quarter.
Definitely looks that way. So you see this pivot almost, away from general storage and mobile,
Right.
towards that specialized high-margin HBM driven by AI.
Fascinating contrast. Shows how dynamic these markets are. Okay, let's switch gears. Financial health, debt. What's the situation?
All right, balance sheet check. Cash equivalents, restricted cash. End of Feb 2025, they had $7,563 million.
Okay, $7.5 billion. How does that compare to, say, mid last year?
It's up a bit. As of August 29, 2024, it was $7,052 million.
So liquid assets grew slightly. That's generally good.
Yeah, positive sign for flexibility.
What about the other side? Debt. specifically long-term debt.
That also went up. As of Feb 27, 2025, long-term debt was $13,851 million.
$13.8 billion, and that's up from...
Up from $12,966 million back in August 24.
Okay, so they have taken on more long-term debt.
Correct.
And the report breaks this down quite a bit, doesn't it? Lots of different notes, different dates.
Yeah, lots of detail. Unsecured senior notes maturing, 2027, 2028, 2029, all the way out to 2051.
Different interest rates on those two, I assume?
Varying rates, yes. It shows how they structure their debt over time, manage the cost of borrowing.
Standard practice to use a mix of instruments.
Yeah.
It also mentions term loans and a revolving credit facility.
They've got specific term loans maturing in 29, 26, 27, and a revolving credit line, the A2030 facility.
Provides flexibility, access to cash if needed.
Exactly. And actually, we'll get to this later, but they increased the size of that revolving facility shortly after the quarter ended.
Oh, interesting. Planning ahead, perhaps. And quickly, fair value measurements, level 1, level 2 securities.
Yeah, it's about how they value their short-term investments. Level 1 is easy things like money market funds with clear market prices.
Okay.
Level 2 is a bit more complex, like certificates of deposit. They use pricing models based on similar assets.
So basically how they manage and value their ready cash and short-term holdings.
Right. And they explain how they check those valuations. It's about transparency.
Got it. Okay, no 10Q is complete without the risks section. What were the big ones Micron highlighted?
As always, a long list, but some key ones. Obviously, volatility and selling prices for memory and storage. That's sort of baked in, right?
Yeah, the cyclical nature of the business.
Intense competition is always high on the list, too.
Sure. What else?
A big one is just keeping up.
Yeah.
Developing the next technology. They specifically mention challenges with HBM yields.
Getting enough good chips out.
Right. And 3D stacking, getting more bits per cell, advanced packaging, power consumption. It's a constant technological race.
Never-ending innovation pressure. They also mentioned risks with expanding capacity, building new factories.
Yes, exactly. With all the investment in new fabs, especially in the U.S., there's a risk they won't get the expected returns. These projects depend heavily on materials, equipment, labor.
And shortages or cost hikes can hit hard.
Absolutely. That ties into the next risk, supply chain disruption.
Which is a huge concern globally now.
Yeah. They mention regional conflicts, unrest, labor issues, sanctions, tariffs, trade restrictions, even environmental regulations. All potential disruptions.
So it's not just tech, it's geopolitics and logistics.
Definitely. For you listening, it means Micron's success isn't just R&D, it's managing this global complexity.
What about protecting their inventions? Intellectual property.
Always critical. Risk of not being able to protect their own IP.
And competitors maybe borrowing their ideas.
Illegally obtaining or using their tech, yeah. And interestingly, they flagged AI development itself.
How so?
Using AI in their own processes might create new risks around IP leaks or even accidental infringement.
That's a very modern risk factor.
Yeah.
And the flip side, being accused by others.
Yes. IP infringement claims are common in this industry. They cost a lot, take up management time, even if the claims aren't valid.
Sounds like a legal minefield sometimes.
Can be. Then there's just general compliance, laws, and regulations.
Environmental, health, safety.
All of that. Complex, always changing, can increase costs or impact how they operate.
Okay. And lastly, share buybacks. How's that a risk?
Well, they have a big $10 billion authorization.
Yeah.
But they point out the amount and timing of buybacks can fluctuate.
Depends on cash flow, performance.
Right. And also potentially restricted by things like their HPS Act funding agreement. Plus, buybacks use up cash.
So it's a balancing act. Return value to shareholders versus keeping cash on hand.
Exactly. So a really broad range of potential headwinds.
Definitely gives you a sense of the complexity. Okay, let's touch on those specific legal and IP matters mentioned. Seems like there's active litigation.
Yeah, like we just discussed the risk. Now here are some specifics they highlighted.
Right. So you see the finances, but there are always these other factors. Let's get into the legal side.
Okay. Several ongoing patent things. They specifically mention continued issues with Netlist Inc.
That name comes up a bit.
Yeah, multiple complaints, appeals, related to specific patents, 912 and 417 they're called. Seems like a pretty tangled, long-running dispute.
And it's not the only one.
No. They also list a complaint involving Yangtze Memory Technologies, YMTC, and others with Basang Inc. and Palisade Technologies LLP.
So multiple fronts.
Yeah.
Underscores that IP battleground aspect.
Absolutely. Requires significant resources, management attention.
Okay. The report also had subsequent events things after the quarter officially ended? What was key there?
Two main things. First, they announced their Q3 dividend authorization on March 20th. Important for investors.
Standard procedure, but good to note.
Second, remember that a 2030 revolving credit facility.
Yeah.
On March 12th, they amended it to increase the total borrowing capacity.
Uh-huh. Okay. Bolstering their financial flexibility even further.
Seems like it. Getting more potential capital lined up.
Interesting timing. All right, finally, the big one. The CHPS Act funding. Huge implications for their U.S. plans.
Absolutely critical. They have a direct funding award and a workforce award from the CHIPS program.
This is for the big New York project, right? Clay, New York.
Yes, for NY Fab 1 and NY Fab 2. But this government money comes with strings attached, conditions, requirements.
Like hiring targets, staffing the fabs.
Exactly. They have specific facility staffing targets to meet by certain completion deadlines for these NY projects. Minimum job numbers.
Makes sense. And restrictions, too. Dealing with certain foreign countries or companies.
Yes, the guardrail provisions. These limit certain expansion activities, joint research, tech licensing, with what the government defines as foreign entities of concern.
Okay.
And they also have to notify the government about planned significant deals that might involve major expansion in a foreign country of concern.
Even if they think it's allowed under an exception.
Right. Transparency is key. It's about preventing certain tech or capacity from ending up in specific places.
So it's funding, but with oversight and limitations.
Definitely. And the funding itself is tied to progress.
So
Conditions related to actually starting the projects, hitting specific disbursement milestones to get the money released, getting all the necessary approvals, and just general compliance with all the CHIPS program rules.
So it's a structured rollout tied to performance and compliance.
Very structured.
The report also defined legacy semiconductors in this context. Why is that definition important?
It's important because the guardrail restrictions often apply differently to legacy versus leading-edge tech. Legacy generally means older tech.
Like not using advanced 3D packaging or for packaging facilities, using older transistor designs like planar transistors.
Okay.
But there are key exceptions. Stuff critical to national security isn't legacy. And more advanced transistors like FinFET or GAA.
The newer stuff.
Right. That's not considered legacy either, even if it meets some other criteria.
So the restrictions are mainly aimed at preventing expansion of older tech in certain countries.
That seems to be the focus. Limiting the spread of mature tech to potential competitors or adversaries while still allowing innovation in cutting-edge areas.
Got it. A nuanced definition. Well, that was quite a journey through Micron's Q2 filing. Let's try and bring it all together for everyone listening.
Yeah, it paints a really clear picture, doesn't it?
Yeah.
A major tech company navigating, well, a pretty complex world.
For sure. We saw overall revenue and profit growth, which is positive.
But very different stories underneath. The business units showed real divergence.
Right. The HBM growth for AI and data centers was explosive. Really stood out, especially compared to the declines in, the broader storage market and the mobile segment.
Here's how fast demand is shifting in memory.
Absolutely.
We also got a clearer view of their finances. More cash, yes, but also more debt.
A snapshot of their capital structure and that long list of risks.
Yeah, that really hits home. Tech challenges, competition, global uncertainty, legal fights.
It just highlights how many hurdles exist in this industry.
So connecting this back for you, the listener, why does this matter?
Well, if you follow tech or invest in semiconductors or just want to understand the forces shaping our digital world, these details are crucial.
Understanding these dynamics within Micron gives you clues about the whole sector.
Exactly. And that CHIPS Act funding, the terms attached, that's a massive factor in their future strategy and U.S. manufacturing overall.
Definitely. So as you think about all this, consider the implications. What does Micron's experience tell you about broader tech trends?
How might it influence investment thinking?
And maybe looking beyond this report, given how fast tech changes, how volatile the world is, what could be the next big disruption?
Yeah, the next big shift that might impact companies like Micron, something maybe not even hinted at here.
Something to chew on. Definitely keep exploring.